SAP is doing very well when you talk about their finances. They're actually doing so well that they announced that they will actually buy shares back from shareholders, actually shares worth of more than 500 million euros. That's happening while basically more money is in the pockets of SAP right now. And they're also basically saying that their earnings in the first and second quarter were better when you compare this 2017. So right now, their earnings in the second quarter was up to 7 billion euros. So lots of money and good news for SAP, and maybe even another pay rise for the SAP CEO, who is already right now the CEO in the blue chip index DAX with the highest income.
Sure, the market is still expecting more numbers to come in, and we just have a day to go, so we'll talk more about some of those earnings that will come in later in the day. Thank you very much for your time, Daniel, and do enjoy the rest of the day. We move on now to the U.S., where the stock index futures pointed to a flat but slightly higher open as investors prepare to digest another batch of corporate earnings reports. Looking at the earnings news there, Blackstone, Abbott Labs, eBay, Microsoft and Visa are some of the major names set to report either before or after the bell. Now, sticking with financial news, jobless claims and the Philadelphia Fed Manufacturing Business Outlook Survey are both due out at 8:30 a.m. Eastern Time, while leading indicators index is slated to come out at 10 a.m. Eastern Time. The future numbers there are all looking green, 0.31% for Dow Jones Industrial Average, S&P 500 tilting up 0.54%, and Nasdaq was up 0.64% as at the last check. And in Asia, the indices there closed higher today as investors digested news out of the Bank of Japan and awaited a decision from the European Central Bank. Japan's benchmark Nikkei 225 rose 0.62%, and South Korea's Kospi edged up by 0.49%. The Australian ASX 200 gained 0.51%, driven by the 1.25% gain in the heavily weighted financial sub-index, but it was partially offset by declines in the consumer discretionary sub-index. Mainland Chinese markets recorded moderate gains, with the Shanghai Composite advancing 0.44% and the Shenzhen Composite trading higher by 0.48%. The Hang Seng Index firmed to gain 0.34% after dipping below the flat line earlier in the session. Positive sentiment was apparent across broader Asia, with the MSCI Asia Pacific ex-Japan Index rising 0.67% to trade close to its highest levels in 10 years. And to all the market news here in Africa, Vodacom Tanzania has extended the offer period for its initial public offering for a second time to allow foreign investors to take part. The company, a subsidiary of South Africa's Vodacom Group, said it had received approval from Tanzania's capital markets regulator to extend the offer period until July 28 after the country changed its laws to allow foreigners to buy telecom shares. The listing on the Dar es Salaam Stock Exchange was tentatively set for August 15. The government lifted a ban on foreigners participating in telecoms IPOs last month, a move expected to widen the pool of potential investors for several major companies. Vodacom plans to raise 476 billion shillings by selling 560 million shares at 850 shillings each. In the meantime, Vodacom Group revenue rose 3.9% to 20.7 billion rand in the first quarter, boosted in its home market South Africa by increased smartphone sales. Vodacom South African revenue grew 7.8% to 16.7 billion rand for the quarter ending June 30, after sales of smartphones rose 17%. International operations revenue declined 8.2% to 4.2 billion rand for the period, which the company blamed on currency volatility. Customers outside South Africa climbed 12% to 30 million. Vodacom says it expects to boost its performance outside South Africa with its expansion in Kenya through a 34.6 billion rand deal to acquire a 35% stake in Safaricom from Vodafone, its majority owner. The deal will give Vodacom access to a market where Safaricom has a 71% share, and demand for mobile phone services is still growing. And here in Nigeria, the chief executive officer of former Etisalat Nigeria, now 9Mobile, Boye Olusoya, says the company is open to new investors but will continue to manage the business in the meantime. Now, the telecom operator officially announced the company's new name to replace Etisalat Nigeria on Wednesday. UAE's Etisalat terminated its management agreement with its Nigerian business in June and surrendered its 45% stake to a trustee following regulatory intervention to save the local company from collapse due to debt. Mr. Olusoya says the company has retained its workforce and that Etisalat's withdrawal had not led to a loss of business opportunities. 9Mobile has 20 million subscribers, making it the country's #4 mobile operator with a 14% market share. South Africa's MTN has 47%, Globacom 20%, and Airtel, a subsidiary of India's Bharti Airtel, 19%. And Guinea-Bissau has agreed a memorandum of understanding with the World Bank, Orange and MTN for a $47 million project to link the country to a submarine telecoms cable connecting Africa with Europe. Under the agreement, French telecoms company Orange and South Africa's MTN group will form a consortium with the government of the West African country. Guinea-Bissau will be hooking up to the Africa Coast Europe cable, one of 5 linking countries in West Africa to Europe. Guinea-Bissau will be the last coastal country in the region to link to a submarine cable. Orange and MTN will provide about $8 million each over a 5-year period. The project is due to be completed in 18 months, and officials say it would improve internet speeds and reduce communication costs in the poor Portuguese-speaking country. We'll be back after the break. Do stay with us.